Hey, what's up, everybody, and welcome back to another small carrier market update. This is the market update for November. Today's November, actually, we're in the last of November, about to roll into the November season. So I wanted to take a few minutes and get on here, give you an update on what's going on in the marketplace. Haven't done one of these in the last couple of weeks. We've got some new tools to look for. So definitely wanted to share that on today's call, but wanted to give you a quick update to see what we got going on so far. So in order for us to get started, we always like to start here at outbound tender rejection. One thing I can tell you, this is probably the highest that we've seen since July, which is a good sign in terms of overall freight being rejected by contract carriers. Also gives you the opportunity to kind of see as rejections rise, rates are not too far to fall from behind, not fall, but too far to rise from behind as well. So if you look at the chart that you see on your screen, 786 is pretty strong. It's the strongest that we've seen since the really quick peak in July, which came around the 4th of July, if you can remember, where we were sitting around 8%. 7.06 is strong. It's strong. We got to see where that leads us to, but definitely something to keep an eye on too. It's not double digit. That really kind of pushes spot rates to continue to push forward, but it's a lot better than the fives and sixes and even in the fours that we've seen in some parts of the year. So definitely kind of look at that as you go forward, looking at it as an opportunity. The next one I wanted to share with you is the volume. We're still flat. When you talk about volumes, we've been hovering around 10,000, 9,995 for the large majority of the year. We had a couple of spikes, here and there. We had an 11 around the 4th of July, but other than that, we've been pretty much around the same, and it's been that way since early fall. We haven't seen a major surge. I don't anticipate a major surge coming, but especially if with some of the retail information that we've received this week, but then also when we see some of the actual import information, we don't see anything changing from that. So definitely something for us to kind of look for as we kind of continue to watch this. But volume is just something that, in order for us to see sustained rate market improvement, we have to have demand, which is your volume. So I'm hoping to see something change from there. As far as National Truckload Index average, good to see that it actually is above $2.30. We've been playing around at 230 for quite some time, and now we're at 238, which is a rise from last week, and it's actually been a rise from where we've been this year. If you remember back in May, we were around 220, so we're 18 cents higher than we were at the beginning of the spring. So it's definitely something to kind of take on as a win. It's showing strength, especially with the shift in capacity that we're starting to see, and we can share some of that here in a minute. But we're starting to see things line up that are positive, and these are a lot more positive things that are coming in from the marketplace perspective. Now, one of the things that we worry about, obviously, is diesel fuel. Right now, it's sitting at 383. It's down slightly, but still higher than it was back in June, where it was at 345, almost 40 cents higher than we were back in June. And the thing that concerns me about is what will happen with anything that takes place in Venezuela or anything that's geopolitical. Obviously, that can trigger us over into the $4 per gallon area. We got to be very, very mindful of that as a really, really strong possibility. So I want you to be aware of where it's going. So that is one of the things that I definitely want to keep our eyes on as we move forward. Now, this can certainly be a little bit misconstrued. It's blue everywhere. Well, it is also the holiday too. So don't look at this as much beyond that. Next week, we'll see what happens next week. Obviously, we have seen market improvement. And as you saw in the past chart, you saw where we were going as far as in spot rates. So that's an indicator. But what I want you to do is be very, very cautious. But when you look at the map itself, we're pretty much blue everywhere. Go to the stronger blue, the blue spots, position yourself and get prepared for next week. I don't anticipate it's just flipping to red all of a sudden. But this is definitely a good sign that we've shown there's some spot rate improvement. From a reefer standpoint, reefers are still holding strong, 15.56 6% on the rejection increase. Capacity is tighter right now in terms of cold chain moving in the fourth quarter. We definitely see those rejection rates there. Last year, if you can compare it to December of last year, we were well over 20% around this time. So that's one of the things that I would say, hey, you know, maybe we're a little bit behind and it's a little more seasonal. We want to keep our eyes on that anyway, because it does give us a lens as to what to expect moving into January and February. When you look at the overall rate index, we're also around 271, which it is slightly lower than it was last year at the same time, but not by much, not by much. And especially as you moved into the back half of the end of 2024, we were sitting at 290 in terms of our average spot rate. So more to come, I guess. We've been kind of inconsistently staying pretty flat from October, because if you remember back in August, when we started off in August, it was just a continuous climb until we got towards around mid-October. We declined again, and then it was a sharp increase as we moved into November. But just kind of something to keep an eye out on. 271 is where we're sitting on the Reefer truckload index. Really happy to see that we have some movement on that, moving in a positive direction as well. Not January, February, but we're not far from that. As far as active counts, we're continuously seeing these small fleets drop by about 1,000 more fleets that have 1 to 6 trucks in just a week. So very, very sharp changes in overall carrier detail counts. We're starting to see a lot of that capacity that we talked about, especially from August to now. We saw a very sharp decrease in capacity exits, which definitely is going to correlate directly with some of that being with the ELP violators and things of that nature. So as there's continuous exits, obviously that has an impact on the rate markets. And in December is when we can expect to see the biggest change in count. So kind of looking for where that would look like. I wanted to throw this chart in this time. I want to give you this chart because this chart really kind of gives us a track that we can kind of follow in terms of English language proficiency violations. Since it's such a hot topic and a hot visible item right now, I wanted to give you insight to what you're looking at. Obviously, from May until now, there's been quite a surge in terms of violations themselves. And then that yellow line that you're seeing on the screen is the actual out of service violators. So giving you an idea on kind of see what that looks like. So you've got the English language proficiency violations, but then you have the out of services, which are counted on the yellow line, so that way you can see it. This also, I wanted to pair this with the capacity exit so you could see where the correlation could potentially be from a small fleet perspective. The higher the enforcement, the higher the amount of carriers are going to be removed. I did read that Homeland Security was bringing on 10,000 plus additional agents for January. So I expect that these violations and those exits to increase in January. So just something to look for as well. When I look at ocean freight, man, we are thinning out in ocean freight. This is one of the lowest that we've seen in quite some time. This obviously is going to concern because this was what we see 3 to 5 weeks down the road. And this is one of the lowest levels that we've seen all year. It's been a gradual and it's been a consistent drop off in terms of overall freight volumes. And what this is telling you is that the less containers that you have coming in, that's less domestic freight that's going to be moving in the next 3 to 5 weeks. So this is slightly a warning sign when it comes down to it. So I don't want you to be surprised when volumes drop about 3 to 5 weeks out, because this is telling us what is happening. And what is happening is that the volume is just not there. When I look at the import volume, I wanted to give you a lens on what the actual ocean volume by port is, so that way you can get an idea on what's happening. Long Beach, as you can see, Port of Long Beach itself is down 13.6 week over week. The year over year is down 33%. Long Beach has just got hammered this year in terms of overall volume. You got East Coast ports like Savannah and Newark looking better, but West Coast, that weakness on the West Coast obviously is going to impact us on the East Coast as well. That retail pull forward is behind us, so don't anticipate any of a really big push from a retail standpoint. But volumes on the ocean side are soft year over year, and that's going to really kind of determine what we look like going into 2026 and Q1 especially. I wanted to give you an idea on what cleared container volume looks like. This is cleared freight that's about to hit the truck. This is the freight that's already ready to go. Clearance on Long Beach itself is down 10%. Newark, you got a 16% surge in a port of Newark. Newark is still showing strong week over week, month over month, and is perhaps only one of the better ports that we see year over year as well. Houston fell short about 30%, and the port of Seattle rebounded with a 37% comp in terms of week over week. And that gives you the idea on what to expect from a dry van perspective. When we start seeing some of that volume, we know where that volume is going to come from. So that is what I wanted to bring to you this week. Just give you a lens on what's happening in the freight market. Take it as you wish. Make sure you share it. Make sure that you move accordingly. And yeah, wanted to take the time out just to spend some time with you on what we're seeing on a market perspective. If there's anything specific that you want to see, if there are any questions that you have on it, make sure you drop a message and let us know. Otherwise, we'll see you on the next one. Thank you.